Hello traders, welcome back to the channel. This is Janoy with Trading the Charts Pro, and guys, we're back one more video breaking down the overall market. And today I'm going to share with you what are my thoughts on where price action is going for this entire market this week. All right, so first thing I want to bring up is the importance of multiple time frame analysis, guys. And here, looking at the Dow Jones, I'm going to show you why multiple time frame analysis can help you pinpoint your ideal sniper entries when you're trading, whether you're trading futures or you're trading individual stocks or you're trading just index, whatever it is you're trading. Multiple time frame analysis can help you to identify the ideal places to execute your trades. All right, so guys, jumping in, looking at the Dow Jones, last week we were talking about this classic bear flag setup that we were anticipating to break down, and come Monday, one day, we had a massive sell-off on that market that drove the entire Nasdaq down. All right, so big picture, let's look at it. Let's talk about it. So right here, we saw that the market made a high around this level, pull back, and then we had the first lower high in this area. Eventually continued to roll over, breaking below the 50 exponential moving average, and then we had this very nice consolidation, right? So anytime price comes down and then builds a base like this, this is pretty much called a bear flag pattern. And what we look for next is the break of that base to take price action down to the next critical level. And in this case, the critical level was the old support that the Dow had right around 33,000. All right, so you can see this was this arrow from last week that we predetermined that this was where we're looking to see the bounce take place in the Dow Jones. And guys, Monday market sell off hard, and then we start to get that bottoming tail, which pushed the market up, and here we are back into the 50 exponential moving average, which has the potential of becoming resistance in the short term. So I'm watching to see, what does this thing do? Does it end up pull back down where we get a second bounce inside this support and then we move back to the top? Or it just gonna be a case where we end up developing a short-term inverse head and shoulders pattern that pushes us up to the top? All right, or is this just going to be a case where we get a bear flag here down to the support, price came back quickly, and then we continue to come back down, and then the question mark would be at support right here? What happens if price plays around that way? The reason it's important is, before we always had the exponential moving average, at least the 50, acting as support. So every time price came back to that level, we would typically get a bounce. Here we broke down, start this horizontal pattern, break back above, no issue, break down one day, back above, no issue. Here we came back, we bounced off the 50 again, but now we are trading below the 50 exponential moving average. So typically there's a probability for this thing to end up turning into a short-term resistance. But also remember, when the market is moving in a horizontal channel, we will discredit a little bit of how much value we give to what the moving averages are telling us, because when price is moving in a horizontal manner, you will see price oscillate above and below the moving averages, and it doesn't really mean too much, because the most important thing is that we have a well-defined support level and a well-defined resistance level. So until price does something above those levels, we won't really try to get too, out of the box, right? We'll just stick to that. Now, the importance of multiple time frame, as I initially mentioned, guys, when we look at all the time frames, we can see that right around that 33,000 level is where support was on every time frame. All right, let me draw it out real quick so that everyone can see it. Boom. All right, so on the daily time frame, we can see here, boom, very nice support. The weekly time frame, we can see at that level is still very clear that that is the support level. All right, here, very clear that this is the support. Even on the 4-hour on the 1-hour chart, we can see that, boom, that is the level. So as far as multiple time frame analysis goes, guys, the key is to use all the time frame to find that specific level, right? And when you identify that specific level, now you will see when bigger traders start to come in and buy once price action hit that specific level, right? For example, you can see on Monday when the Dow sold off, as soon as it got down to that 33,000 level, what happens to the next hourly candle? Guys, it's been nothing but buying at that level, right? So we got huge buying, right? Push it up. If you weren't convinced that it's going to bounce at this level on the hourly, you could have waited for this pullback bull flag pattern, and then we had the breakout of that pattern here. So boom, bull flag, and then we got the breakout. This was the candle to enter in to go long right back into this support level that price broke down to. So that was the trade. The trade was from this 33,000 level all the way back to this ideal level where we broke down, because there was no guarantee that we would break back above this level and be sitting up here right where we are right now. All right, so that's the overall big picture. That's how I'm looking at the Dow Jones. So let's keep it moving. All right, NDX. All right, so guys, last week we talked about NDX. I wasn't really anticipating that the Nasdaq was going to sell off, right? But we did talk about where would the market go in the event that we get a sell-off, right? We knew that the support of the short-term channel was where we were anticipating the market to pull back to if we get a pullback, because we see the pullback here, support, pullback here, support, and we knew, boom, if we came back to this level, this is the first level we're anticipating the market to bounce at, right? If we don't bounce at this level and then we get a breakdown, we knew that we were coming back down to this level right here, just like we did here, just like we did here. So in the short term, market pull back to the inner trend support, and we bounce, and here we are. I'm anticipating that we move higher as long as we're able to take out the support of the gap down. So the market gap down Monday, here we are, double Thursday and Friday, just building a base here, looking to see that thing push back above, and then this pattern itself would be just a small inverse head and shoulders pattern. If it rolls over, then I'm anticipating that we come back down to the longer term support. Guys, it's super important to not be biased to any one direction. You have to have a multiple analysis or a analysis of both directions. So pretty much what we're saying is, if A don't happen, then we're looking for B to happen, right? And if A or B doesn't happen, we're looking for C to happen, and C would be that black swan event. All right, so that's how you always have to look at the market, because if you are just biased to A, then when B takes place, you're gonna pretty much get hit. You're gonna get caught off guard. So that is the main reason why we come out here every week and do a market analysis, showing you how I'm looking at the market, both to the upside and what levels we're looking for, if breached, for the market to start moving further to the downside. All right, so this is the main reason for our weekly market outlook. All right, so that's what I'm looking at for the Nasdaq still sitting above its 50 exponential moving average. We're looking for it to continue moving up, take back the upper resistance of the trend. All right, let's keep it going. Let's look at Russell 2000. All right, guys, last week Russell 2000, again, multiple time frame analysis. We can see on all time frames where is the ideal support, where is the ideal resistance, because this is very important. All right, this is extremely important. Why is it important? It is important because once price gets to those levels, that's where we would buy. And last week we talked about the rising 200 SMA, and as the Russell pulled back, we talked about, I didn't see the Russell coming back down to the support. I figured if we pull back, it would be right into the 200, and then we'd get a bounce from that level, coming back into the resistance. And that's exactly what we're seeing taking place right here, right now. So still bullish short term on the Russell from the 200 SMA, short term play into the 2,300 levels. All right, if we get a breakout, then we look for the Russell 2000 to start making new highs, as it is, or as it has been channeling for almost a year right now. Since December, this thing has done nothing but move sideways. All right, so we're still optimistic, looking for more upside move on the Russell. And now it's time for the bad news, guys. All right, so let's pop this open. SPX, S&P 500. Now we're in a critical place with the S&P 500, guys, because the market literally broke the support. It broke the support. It gapped down, came all the way down, and here we are. Price just started to pull back up, and it's right back at the support level right now. So I'm looking at this two ways. Two things can happen. Currently, futures is up around 6 points. Nothing too interesting, right? Still need to get back above this level right here in order for us to move any higher, right? So looking on that, just looking at that, right? So basically what we're saying is that price needs to break back above the trend line in order for us to get a move higher to the upside. But this can be bad because we broke the trend, and now this trend line can become resistance, which end up setting up this market for another leg to the downside. All right, and when that next leg to the downside, if this pattern starts to play out, if we take out this low that we made not too long ago, then we're looking for this thing to just come and pull back all the way down to the 200 SMA. All right, so that's how I'm looking at the S&P 500. Do we get a bounce or the continuation of this bounce, moving above the trend line, and then we come back and try to see if we can take out this potential double top? Or is this just the entire end? Is this the end of the entire thing, and we are pretty much seeing a head and shoulders pattern forming right here, right now, and this is the actual neckline, right? This is the neckline, and once the neckline get breached, we're looking for this entire thing to tumble at least to the 200 SMA. First place, if we break down below the 200 SMA, then we can look for this market to start heading down into the retracements levels. All right, so this is how I'm looking at this market. It's a very interesting time right now as we head into October, but there's no need to get scared. We just have to use all of the price action as a guide and know when, why we're doing what we're doing, and how to continue using these levels as a guide as we start to make our decisions. So last week we talked about the VIX, and the VIX had set up in this bullish pattern, which I didn't really see this coming as hard as it did. We were watching this downtrending resistance line for a soft breach, but as you can see, guys, on Monday this thing just gapped up, came up into this resistance level, and here the VIX is coming back down. All right, so we want to see, does the VIX come down and settle below 15, or is it just pulling back down to the support level to bounce up again, right? So it's a very critical time, guys. I'm still bullish on Nasdaq, still bullish on the Russell 2000. I'm also bullish on Dow, but the S&P 500 is in a very critical place right now. We need one more day to fully know for sure where this thing is going. All right, so guys, continue charting your charts and trade safe. And if you watch this video till this point, I want to thank you very much for watching, and I will see you in the next one.